It's the last edition for the week. Good morning and welcome to Business Morning. I'm Ini John McQuan.
And I'm Ladi Williams. Thank God it's Friday. Let's look at what's happened in the world of business. A total of $963 million in airline revenue have been blocked from being repatriated from the sale of tickets, cargo space, and other activities by governments in nearly 20 countries. Statement from the IATA says Nigeria accounts for $143.8 million of the total blocked funds, which could slow the recovery of the travel and tourism industry, one of the hardest hit by the economic impact of COVID-19. Meanwhile, the global aviation body wants governments to work with the airline industry to ensure efficient repatriation of the funds to support operations within the global aviation industry.
And expectations are high that the signing into law of the Petroleum Industry Act would open up new opportunities in the oil and gas industry. According to the Lagos Chamber of Commerce and Industry, this will increase inflow of investment and create more jobs for many unemployed youths in the country. The Chamber is, however, asking the federal government to provide clear communications on the issue of oil subsidies, as well as engage stakeholders to achieve an inclusive deregulation of the downstream sector. It also urges the government to establish a robust mechanism in consultation with private sector operators for an efficient implementation of the PIA. You know, like there seems to be a lot of questions as per the implementation, and I'm glad we're going to have a little bit of discussion on that on the program today. Yes. Like the LCCI is asking to know what's happening to subsidy.
Yes, exactly. All those nagging questions.
Yes, and the 12 months given to the committee, what should we be doing before then and what should happen?
Exactly.
There's also the issue of NNPC. They're supposed to be privatized or commercialized at the,
Is it being
6
privatized?
months after, or commercialized.
Exactly.
And that's supposed to happen in 6 months after the signing. You know, so there seems to be a lot of questions.
There's a lot of questions,
this is going to stay in the news and in a lot of programs for a long time, at least until we begin to see the implementation of it.
We'll be watching that closely. Well, oil prices came off 3-month lows today, but we're on track for a weekly decline of around 6% as new lockdowns in countries with low vaccination rates facing surging cases of the Delta variant dim the outlook for fuel demand. A broader investor risk aversion also weighed on oil, with the U.S. dollar jumping to a 9-month high on signs the U.S. Federal Reserve is considering reducing stimulus this year. U.S. West Texas Intermediate crude futures for September due to expire on Friday rose 35 cents to $64.04 a barrel after sliding 2.7% yesterday. The more active October contract rose 33 cents to $63.83 a barrel. Brent crude futures rose 27 cents to $66.72 a barrel after dropping 2.6% on Thursday to its lowest close since May. China has imposed new restrictions with its zero-tolerance coronavirus policy affecting shipping and global supply chains, and the United States and China have imposed like a tit-for-tat flight capacity restrictions. Meanwhile, Delta variant outbreaks in Australia and New Zealand have sparked strict lockdowns. The approaching end of the U.S. peak gasoline demand season and the end of summer holidays in Europe and the United States are also set to sap oil demand. How is the global price trickling down to the economy in Nigeria, especially in the face of reduced FX flows? We'll have this conversation with Mr. Ayodeji Ebo, Head Retail Investment, Chapel Hill Denham. That's after the break. Do stay with us. This is Business Morning.
You're welcome back. Well, we have Mr. Ayodeji Ebo now to talk about the happenings in the global oil space and as it affects the country, Nigeria. Good morning, Mr. Ebo.
Good morning, and thanks for having me.
You're welcome. Well, crude oil prices have been on the downward trend in the last few days on the back of low demand from China, of course, like we read, due to COVID-19 and the restrictions. Now, should Nigeria be concerned? Does it look like this has come to stay?
Okay, thanks. And just a bit of background. And if you look at the crude oil prices, has declined by about 14% from the peak of 70. That's actually speaking to the Brent crude now, climbed from about $77 on the 5th of July. That was the peak in the last 1 year. And currently around $66, even as at this morning, also down. And if you look at how Nigeria is structured, it's still very fresh in our mind, the impact that crude oil prices had on the economy within the last year. And this also coming now, when you look at, when you check our budget benchmark, it's at very considerable level at of $40 per barrel. That's a very considerable level. But you know that the revenue, the export, the proceeds that we get, 80% of our export proceeds from crude oil. So once we have that sharp decline in terms of what comes into the economy, that impacts on a lot of things. Firstly, you see that impact on what government is supposed to, in terms of capital expenditure. You see that or that impact on even the external reserves, in terms of operation of the external reserves. So it's really very concerning, and as long as we don't diversify our FX inflow, then we'll continue to get very concerned anytime we see crude oil prices declining significantly. And when you look at, based on the expected, when you look at the break-even point for Nigeria in terms of crude oil prices, it's been pegged around $130. And you can see that major gap. Even looking at the supplementary budget that was just passed, you will discover that the revenue expected out of expenditure about 900 billion, revenue expected is about 130 billion, which leaves a gap of about another 800 and something billion that would be funded by borrowing. So it really calls for concern, and it just always reminds us that we need to intensify efforts in terms of diversifying our FX inflows.
All right. So based on the positive GDP growth forecast for the rest of the quarters, what kind of setbacks do you think we should expect at this point?
Okay, thanks. The projection, when you look at the traction that we've all been hoping for, we can see for Q1 it's been positive, and we're expecting Q2 before the end of this month, which when we look at it on a base impact or a base effect, we expect that should be significant, at least above 4% based on the base effect. And we expect that traction will be able to sustain that traction, which has informed a lot of projection of above 2% growth rate for the rest of this year. But we've been seeing even across the globe that the impact of the Delta variant has been impacting on demand. You just spoke earlier in your intro about China have just been they've locked down their ports. We have countries already on lockdown, and that would also have impact, because when you look at in terms of remittances, that also helps to support the economy. If those economies are not also performing very, very well as they should, that would lead to job losses. While we are not expecting as much impact like last year due to the availability of vaccines now, but we feel that if it's sustained at the rate at which it's been increasing, number of the spread even in Nigeria has been increasing, that would impact on businesses. And you look at especially the education sector that just been recovering. We know the tourism sector that is still very suffering. They've now been in recession and is still suffering because large gatherings would be discouraged. So we don't expect, when you look at some of the major sectors, the agri sector, the industrial goods sector, as long as we don't see any major restriction in movement, in lockdown, then we feel that, yes, we may still be able to meet up with that expectation of projection in terms of growth at the end of the year.
So do you think that Nigeria will be able to shield itself against this volatility of oil? And if you think so, how?
So this has always been a recurring question or concern each time we see oil dwindle. And we need to be more deliberate. There's been a lot of white paper, a lot of documents working towards diversifying our FX base. The economy is well diversified. And when you check for most new governments, anytime they are also talking about what they will do for the economy, it's always dwells more on diversifying our FX space. So I believe that what we can do, which is not new and which I feel government knows, is that we need to identify what we can export. Look at the top crops that we can export or what we are currently exporting. When you look at the import and export data, some of those top cash crops that we export, then we can see how do we want to invest more? How do we want to add value to a lot of these things so that we get more revenue from them? And even minerals, gold, we have a lot of this, and not to just continue to dwell on them. We have a working paper that we can just implement. We need to start. Even looking at it from the CBN angle, the support of some of the, within the agri sector, we can see the intervention funds. Support too should increase towards crops that we can export so that we can be able to earn. I know what the CBN is doing is to focus on crops that have been demanding a lot of FX, which is also very good because it will help us in terms of stability of our exchange rate. So by and large, I feel our problem is more of implementation. We have the EGRP document, we have the even the sustainability document, but how much of that are we trying to implement? And if we don't implement, no matter how we talk about this policy, how it sounds very interesting, then we will not be expected to see some results. So I think focus should be have that long-term plan. If it's a 5 or 6 year plan, and we can measure even the impact, and we can be able to see the traction that we are getting from that.
All right, another thing that comes to mind now is the impact of reduced FX inflows and the external reserves actually declining, and this actually affects our exchange rate. We've seen several adjustments since the start of COVID-19 in less than 2 years. Are there any major concerns here?
Yeah, I won't say there's any major concern now because when you look at the current situation, the external reserve is at about $35 billion. We're expecting to draw down from the SDR, IMF SDR. I think that should come in by next week, about $3.3 billion. Well, also the government is also trying to raise Eurobond about target is about $6.2 billion. So by the time you look at these developments, they provide support. And if you add them up, you may take the reserve to close to about $40 billion. So that provides enough comfort. However, when you also look at it, I would say we also look at it from this perspective. Last year, we had a lot of the foreign investors trying to leave the market. So in terms of the demand, was very significant. Yes, while we still have some of them still awaiting supply of FX, they are not as much as what we saw last year. So we don't expect any significant shifts, where our projection is that as we progress, there will be a bit of convergence between the two major markets that will still have the NAFEX rate and the parallel market rate as we progress. Because when you look at the 12 months forward, at the investors and exporters window is currently around 430, 530 naira to a dollar based on the market. So what we would expect at that end is to see a bit of convergence so that we can reduce the arbitrage opportunities, and that would also reduce the pressure even on the CBN.
All right, Mr. Ibo, just before we let you go briefly now, how do you see investors reacting if this downward trend continues in oil prices?
Okay, thanks. I believe that most times when they are, when we have this kind of impact or when there are volatilities, they also present opportunities. Looking at the equities market, the dynamics have changed compared to last year. The foreign investors were the major player in the market last year. But when you check the NSE data for this year, the domestic investors have accounted for an average of over 70% of the transactions in the market. So foreign investors trying to pull out, we won't see as much impact in the market. But when you look at within the oil and gas space, the banking sector lending is about to oil and gas about 30%. So most times you see increased impairment charges due to volatility in oil prices. But beyond that, if we don't experience any major lockdown, we feel that most of these companies will be able to sustain that positive momentum that we've seen over the last 6 months. And we believe that would help. And looking at the fixed income market, if the government is able to achieve the $6.2 billion Eurobond target, that would also reduce the demand even in the market, and we won't see any major spike in terms of rates for the rest of this year.
All right. Thank you so much, Mr. Ayodijebo, for joining us this morning. Mr. Ayodijebo is a head retail investment at Chapel Hill. Then enjoy the rest of your day and your weekend.
Yeah, thank you, and you too.
So we'll take a break now. After the break, we have two discussions, more reactions from the petroleum industry and we see what's happening in the entertainment industry. That's after the break. Stay with us. It's Business Morning on Channels Television.
Welcome back. Now to our next conversation. The federal government has been commended for signing the Petroleum Industry Act. There have been many rounds of applause to the present administration, as many believe that it will open windows of opportunities in the oil and gas industry with renewed optimism for increased inflows of investment, revenue generation boost, and job opportunities. Well, we have Mr. Chinwedu Enechi, Associate Director, Oil and Gas and Power, Anderson, to share his thoughts on this. Great to have you on the program. Good morning.
Good morning. Thanks for having me.
All right, so the 3% revenue allocation to host communities in one area which seems, unresolved, even after the bill has become an act. How do you see this actually being resolved going forward?
Well, for me, looking at the issue, the law has been signed. So I guess the aggrieved parties will then need to engage the government and see what can be done. Obviously, when you look at that region, they've been clamoring for more. A party said 5%, and then another party said 2.5%. And what happened was that we reached a compromise of 3%. And mind you, we also have the 13% derivation that also goes to that region. So I think the focus should really be what is going to be done with the fund. When you look at the Petroleum Industry Act, good enough, what we have is that you're going to have a host community development trust that's going to have participants from the local communities as members of the board. So essentially, they're going to determine what that fund is going to be used for and how the fund will be used. So yes, the issue in terms of what percentage to apply may continue, but I think the focus right now should be how do we even ensure that whatever fund that is contributed into that trust is actually used for what it ought to be used for. Essentially, what you have in the Act is 75% put aside for capital projects, And then you have 20% for as reserve fund, and then 5% for administrative cost. So I think when you look at what the Act is trying to do is essentially trying to make sure that rather than have a situation where you have government appointees and several people determining what the funds should be used for, now you have a situation where you're going to have members of that community taking part in decision making as to how that fund should be used for a developmental project. So, like I said, I think the parties can, continue to engage the government to see whether more can be allocated to that. But for now, we have a law, and we know how long it's taking us to get here. And so, asking for more for now, or getting more for now, may not be an easy task, given how long it's taking us even to arrive at where we are.
Well, but there are some, concerns that the Frontier Exploration Fund is actually too big, considering the challenges we have in Nigeria. What do you think?
Well, for me as a tax consultant, I like to stay away from political arguments. Yes, there are parties who will say that the amount being allocated to Frontier Fund is quite large. But I guess the government has intention why that is being done. The whole essence is to see how you can develop the frontier region and the deep offshore. Obviously, if you look at what is happening right now, you realize that with what you have in the Act, a lot of incentive has been given to that area to see how you can encourage crude production from the frontier region and push investors to that area to see how much of development crude development can happen in that region. And to be fair and to be true to ourselves, in the near future, most of our crude production is going to come from the deep offshore and the frontier region. Now, I think the question then is, with the funds being allocated to that region, be really used for what it is meant to be used for? I think that's another question. And I will leave that to the politicians to decide whether how that would be put.
Okay. Well, the steering committee has 12 months before implementation. What should the members be doing within this 12 months? And what should Nigerians be preparing for ahead of the implementation?
Thank you for that question. I think, first of all, what we need to look at is where we are. Where we are in terms of the current act, the Petroleum Profit Tax Act that we had up until, this law was signed. I think if you look at how we then transition from where we currently are to where we want to be in terms of really implementing the law. Obviously, you're going to have some provisions of the law that you'll be asking yourself, should we begin to apply immediately, or should we give a room for operators to run their business up until the end of the year? So I think the steering committee really needs to engage the stakeholders, which is the oil and gas players, to say, okay, how do we transition everybody into the new law? But that is going to give you first of all, you need to understand where we are, what happens with the current law that we currently use, and how we then move people from the PPTA or the Petroleum Act to the new Petroleum Industry Act. So a lot of engagement needs to happen between the steering committee and the industry players, so that everyone is carried along in terms of the implementation of the Act.
All right, from your perspective, what's the plan here in the Act for subsidy?
Well, the subsidy issue is usually, the conversation is that subsidy is going to eventually be removed. Because if you have a situation where we're not able to enjoy the benefit of increased crude oil price because we're paying subsidy, the whole essence is that you want to have a situation where subsidy is completely taken out. Unfortunately, the law doesn't make any specific provision with respect to removal of subsidy. But I guess the government is playing along or having other conversation around that. Look at what the NNPC was saying some months ago, looking at how much subsidy is costing the government. Obviously, sooner rather than later, we're going to get to the point where Nigerians begin to pay for petroleum product, the actual price. But the law, as it is now, doesn't make specific provision with respect to subsidy. But I think looking at what NNPC is doing and how the NNPC is going to be structured with the commercial orientation and no recourse to government funding, obviously it pays them more to get to the point where you're not having to fund the additional cost of bringing refined production into the country.
All right, thank you so much for sharing your thoughts with us. I mean, that subsidy matter, I know it's going to form a lot of conversations in the nearest future until we know for sure what the government and the NNPC decides to do. Thank you so much, Mr. Chiwendu Inechi, the Associate Director, Oil, Gas and Power at Anderson, and enjoy the rest of your day.
Thanks for having me.
So we'll switch now that asking, are the dark days over for the entertainment industry, especially the cinemas? 2021 half-year result shows a total movie ticket sales of 959.9 million naira from half-year of 2021. With the world still dealing with COVID-19 and countries like China even reintroducing restrictions, there are questions whether the culture of cinema going will resume in the same way it was before the pandemic. Well, let's hear from one of the players in the industry. Jude Martins is the communication analyst with Cinema Exhibitors Association of Nigeria and is here to share his thoughts with us. Good to have you, Jude. Good morning.
Thank you, Ini and Ladi, for having me.
So how much of a blow did the cinemas get from the pandemic, or is still getting
at this point?
Yeah.
Okay, so it was really terrible in 2020. We lost a whole quarter of Q2 and Q3 to pandemic and the lockdown. But from October of 2020, there was we resumed, and there's been a resurgence since then. We've seen, permit me to utilize this platform to really say a big thank you to Nollywood. Content from Nollywood have really saved the industry literally. And we've seen a growth and improvement from Q4 of 2020 all the way into Q1 of 2021 and up till now. It's been amazing, and to think that in Q2 towards May and June, we saw a resumption of Hollywood studios in cinemas, the likes of Wrath of Man and, of course, Hitman's Wife's Bodyguard coming up. It's been amazing. The figures have been good. So I can say that the stakes are high for cinemas.
Okay. Looking at it right now, the cinema industry, is it safe to say we're in recovery? Right?
Yes, that's a perfect word. Recovery is a word. We are in a perfect recovery period for Nigerian cinema.
Okay. But in recovery now, what has changed? I mean, because we still have COVID-19 living with us. The Delta variant. Yeah. I mean, some countries are even going to restrictions. Yeah. You know, what's new? How are you guys handling that space to ensure that you don't attract the wrath of regulators and government, you know, so that we don't go back to where we were?
Okay, so I can tell you we are very strong on upholding COVID-19 safety procedures and precautions across cinemas. We as an association, the CAN association, we keep reiterating the importance of players to adhere to instructions and the distance sitting, hand washing, making sure that the cinema spaces are in good hygiene state. Right. And we take that very seriously, and we're working very closely with state safety associations, Lagos State COVID-19 committee. We are working very closely with them to ensure that everything is in place to continue to make sure that we continue the correspondence here.
All right, so looking at streaming platforms now, like Netflix, we see a lot of Nigerian movies actually being
I knew that was coming.
So how does this affect, earnings for the cinemas?
Okay, so I think it's important for us to begin to look at it differently. So for cinema players in Nigeria, we don't consider streaming an absolute competition. We see them as complementary, and that's what it is. And we are currently having conversations around windows to make sure that stakeholders in the industry benefits from both streaming platforms and cinemas as well. So they're not really a threat, so to speak. We see them as complementary. We see it as an avenue for revenue to go to producers of content to the ecosystem generally. And then, yeah, so that's
how does cinema benefit from that? We understand the producers, but how does cinema benefit from that?
Okay, so it's content. So if you look at, there's some films you see on Netflix and on some VODs, and you actually wish you want to see them on cinemas. So we are having that conversation around, okay, let's have some of your content come on Netflix. It's not finalized. We're hoping that something like that happens, and it's been good so far.
If a movie is streamed,
yeah,
can it still come to the cinema?
So I'll ask you, has movies being in cinema stopped it from going on streaming?
Oh, okay. Right. Okay.
Yeah. So it's something we believe, and it's not just a conversation that is locally based on a global scene as well. Just last week, Warner Bros. had signed a pact with AMC Cinemas. AMC is the largest theater exhibitors in the US, and they agreed on a 2 weeks window for films coming from Warner Brothers to first come to cinemas before they go to view the platform. So it's something that is workable. We're not just imagining things. It's workable.
And talks have already started.
Yeah.
So we have some innovations going on. And you have the drive-in cinemas, you know, where people come in their cars. And, you know, what are you guys adopting some of these things to also follow with the, you know, regulation of COVID-19 and still staying open?
Well, some players have tried out drive-in cinema exhibition style. But I don't think it's something that's very workable in the Nigerian setting for several reasons. So the experience is not the same. That's what it is.
You're being too traditional.
No, I'm not. I'm not really, because okay. So I'm not discouraging anyone who wants to go into it, but it's just something that people have tried and they stepped out. So you may want to ask questions. Why do you guys stop? So before you go in, try to find out from people who have tried. Why did you guys stop?
All right.
I think that's a better conversation.
Hollywood versus Nollywood. Who's dominating in the cinemas, right?
So, like I said, I'm very patriotic.
Are you patriotic or being objective?
No, both ways. So this is it. So far, Nollywood, for Q2, it's been a 50-50 performance, especially with the opening weekend of Fast and Furious 9 in June. It was amazing, and that stepped up Hollywood's performance. Before then, we just had Wrath of Man and Hitman's Wife Bodyguard, and that was like a 70-30, with Nollywood having a larger share. But with Fast and Furious 9, it came up. And with the slate of films that are lined up for Q3, the rest of Q3 and Q4, we are most likely going to see a Hollywood dominance return.
Hollywood dominance.
Yeah, and that also reminds me about a lot of times, I don't know if it has changed now. I haven't been to the cinemas in a while, actually. I was going to
ask you when last.
It's been a while. COVID changed everything.
Can you see?
So what's your content now? Is it more of local or foreign? Because when you study taste of consumers in Nigeria, most of them actually kind of believe that if I'm going to the cinemas, I'm going to see something foreign.
Foreign movie.
So I think it's dependent on genre to a large extent. I'll take for instance, action. I don't see most people going to the cinema to go and see Nollywood action. But when it comes to drama, we are very skillful at that. We tell good original stories that people can relate with. And so they patronize that a lot. But when it comes to action, sci-fi, everybody wants to go Hollywood. So it's different strokes for different folks, depending on what your favorite genre is.
But which one is dominating now? What's more? What I know is you have the foreign more.
Foreign more action.
Action, okay.
Nollywood drama, still there. You have the drama and thriller to some extent. You have the Mogitos bringing in huge numbers. You have, so in Q3 we're expecting the likes of Jimaic's Bad Comments. That's a fantastic drama on social media, ranting and all that people want to see. There's also coming up Scorpio, Basketball Scorpio is up for release. And so people are anticipating a whole lot of Nollywood titles.
So I noticed that there's a lot of synergy now. You don't just wait at the cinema for producers to come. You work with them, you know, so that you also determine how, because we talk of quality here also, if you want to get how it is being done, you know, before you can now attract, you know, people to the cinemas.
Yeah, exactly. So the conversation around quality has been very strong. We're having to collaborate with a whole lot of producers to make sure that they understand what is needed in the cinema and that they're able to give people value for money. And yeah.
So looking at streaming now and the cinema.
You don't want to leave this topic.
I don't want to leave. Which one is more profitable for producers?
It depends on who you're working with in terms of streaming. Not everybody has the kind of money that some other people have.
Okay, so
but for cinema really, there's no fixed template.
Okay.
It boils down to the content, the marketing strategy, a whole lot of things go into what makes the blockbusters we see, the big numbers we see.
Yeah.
So it depends on the kind of effort and energy you put in terms of cinemas and streaming. It depends on who you're working with.
Okay.
There are some people who have money to, I'm not going to mention names, and people who have money to spend. There's some people who will
promote and all that.
Exactly.
All right, thank you so much, Jude Martins, communications analyst with Cinema Exhibitors Association of Nigeria.
Thank you.
Thank you so much and enjoy your weekend. One of these days, I'll be back to the cinema.
Please,
get some tickets.
I'd like to host you, please.
Right?
Yeah. Thank you very much.
That would be nice.
Yes. So we'll take a break now. When we come back from the break, we'll head to the markets. Do stay with us. Yeah, welcome back. Well, for opening calls to the market now, we have Anita Edits.
Yes, good morning, Ini.
Good morning.
Yeah, I'd like to tell you that the Nigerian stock market, it has hit a 4-month high, because it's been back and forth in between a struggle for supremacy between the bear and the bull. But just before we go to the equities market, let's take a look at the transactions at the fixed income market. Starting first with the bonds market, it was bullish. It was bullish performance across board for it. Investors' demand for the March 2024, February 2028, and the March 2036 bonds, were the major drivers there. Total number of deals there, 12, valued at 3.40%. No transactions. It was quiet, flat at the Nigerian Treasury bills market. Average yield there stayed at 4.6%. For the open market operations, was much more of activity there. Average yield there was also at 6%. So, and then, of course, for the CBN's Treasury bills, increased activity there. But now to bring us up to speed with what happened on Thursday and then to give us an outlook for what to expect today and for next week, let's talk to Chuka Nwachukwu, who's the head of bond trading at UBA. Thank you for joining us, Chuka.
Thank you very much.
Okay, so now can you bring us up to speed with what happened in Thursday's trading at the fixed income market, in particular the Treasury bills market, which it was kind of flat, no activity there, and then what to expect for today and next week?
Okay, thanks a lot. Well, like you rightly said, the CBN market was slightly quiet, though towards the end of trading yesterday, we saw a bit of bullish sentiment. This is because of people were trying to cover up the unmet demand at the PMA last week. Also trying to help some of the customer demand. Although generally it was a quiet trading activity starting from Wednesday to Thursday. Today so far is also been quiet. Next week there will be a PMA auction, and we expect that some of this unmet demand from the last PMA and from this week customer demand will be filled in the market PMA auction next week. On the bond side, generally the bond market was active. On Wednesday was the bond auction where we have 3 maturities in display. We have the 2028, the 2026, and then the 2050. So what we saw in the market was that the DMO offered 150 billion and sold well over 290 billion. It dropped. The rate dropped from from the shorter end, which is 2028, and dropped to 11.6 from 12.75 the previous auction.
Chuka. Okay, sorry to cut you there, but thank you for giving us that piece of information at the fixed income market. So that was Chuka Nwachukwu, the head of bond trading at UBA. So now let's move over to the equities market. Like I rightly told you, it's regained 0.32% from the mild profit taking that we saw on Wednesday. And of course, the market went up in value by 65 billion, about 65 billion naira, and that came on the back of MTN Nigeria, which was able to counter a negative session which pervaded most part of that of Thursday. And of course, when you take a look at the sectoral performance, mixed across board there, as well as the on the activity. So that's all for the markets.
All right. Well, we hope that the week, at least in the equities market, the week will end with a bull in domination, so that we'll have a great weekend, a green weekend, and up to a green Monday. Thank you so much, Anita.
Pleasure.
All right, just before we head to the crypto space now, a little bit of update from the UK. Retail sales in Great Britain fell sharply in July as a boost from the Euro 2020 football tournament faded and people dined out more, and so they bought less food and drink to consume at home. Retail sales volumes dropped 2.5% from the month before, and that's according to the Office of the National Statistics. While economists had expected a small rise of 0.4% in June, sales rose by 0.5%. Food sales declined 1.5% last month after a 3.9% increase in June when sales were boosted by the Euros. Petrol and diesel sales fell 2.9%, the first monthly decline since February, as heavy rainfall in early July led to fewer cars on the road. Clothes and household goods stores both reported declines of 2%, while department stores were the only sector to report monthly growth of 0.2%. Well, that's it from the UK. I think Laddie Williams.
Yeah, as we noticed, it's a Green Friday again.
Again, for the third time.
For the third time. And I feel like we should have a plan here. Buy earlier in the week.
And sell on Friday.
Right?
I think it sounds like a good plan.
Sounds like a plan, yeah. Market cap back above $2 trillion is up 7.05%. 24-hour volume, $113.15 billion, up 3.86%. Bitcoin dominance at 43.46%. Price of Bitcoin at $47,124 at ATM this morning is up 6.19%. 24-hour volume for Bitcoin traded this morning, $36.76 billion. Look at that weekly chart there. We have that MACD cross now, and the histogram has printed green there. So this has not happened in about 11 months, and this is quite an historic moment for Bitcoin. It could break out. We'll be watching that. Let's bring in Michael Inaji now, digital market analyst. Hello, Michael.
Hello, Letty. Good morning. How are you?
Good morning. Happy Friday. Great to have you, Michael. So we've had Coinbase actually adding DeFi and Bitcoin to their balance sheet worth about $500 million. That's quite big news. What does this mean?
It's a very it's a lot like the Michael Saylor move that we saw last September when we saw him add Bitcoin on his balance sheet. He was one of the first corporations with his MicroStrategy to put Bitcoin on his balance sheet sometime in September. It's literally around the same time. And what we saw in the next months was we saw Bitcoin move on an exponential scale, essentially because what that means is they got the regulatory clearance to own DeFi, especially Ethereum and other projects on their balance sheet, which means, so despite whatever the SEC is going to do in terms of whether they're going to fine a lot of these products as securities or not, it means that Coinbase has the confidence to go forward and own them on their balance sheet. And it's a lot like they're just de-risking holding Bitcoin and Ether and other DeFi projects on the balance sheet. So what they're doing is on the risk tail of things in crypto, they're just de-risking things people probably would have been scared to hold on their balance sheet because, hey, now at least they know they're going to sue Coinbase as well. So there's someone else to basically, throw shade at if the regulators ever come. And you can always be like, hey, why did you let Coinbase buy DeFi products on their balance sheet? Why didn't you stop them? Because that's one of the benefits now of being a public company. Another unique thing that they said was moving forward, they're going to be investing 10% of their profits in crypto moving forward, which is a very very good feedback loop in terms of, them believing in crypto to be a store of value. And, putting away 10% of your profit in the crypto is akin to a share buyback. But, them and Michael Saylor are reinventing the wheel now, and how corporations use their excess profit, in order to protect themselves in the future.
Okay. All right, Michael, very quickly now, are you bullish on Coinbase stock?
Yes. I think Coinbase stock and MicroStrategy stock are one of the outlets that some institutions, they have charters that basically, it's hard for them to own things like Bitcoin and other things. So it's a kind of an indirect exposure. So yes, I'm heavily bullish on it because it's an avenue for a lot of pent up capital that can't hold Bitcoin to get into the market. Yes.
All right, Michael, thank you so much. Always great to talk to you. Have a green weekend.
Thank you so much. You too, Laddie.
All right, so now let's look at the coin to watch. They had their IDO a couple of days ago, and they got listed yesterday. That's Babylon.io. They got listed. The IDO cost about 4 cents. Got as high as over 20 cents. That's about 5x on listing on ApeSwap. That's a big one there in the IDO space and NFT space. Babylon, they're doing really well today. Market cap at $39.49 million. So if you got in that IDO, congratulations. That's how the market's looking today.
Thank you, Laddie, and we hope it to continue to look good through the weekend. And maybe we should really work on that plan we're talking about.
Yeah, that plan should, it's quite profitable, but hope it doesn't flip on us next weekend.
I hope so too. Well, that's it on the program for today and the week. Thank you so much for watching. Do remember to join us at 1:30. We'll have a fresh episode of Business Incorporated. I'm Ini John Mekwa.
And I'm Laddie Williams. Have a great weekend.